Good afternoon, everyone. Welcome back to the commodities update video. This is where we do analysis on natural gas, UNG, oil, silver, gold, as well as the US dollar. And today we'll be looking at support and resistance levels to potentially play off of, as well as a couple patterns that's happening at this moment. And the most likely scenario price will be heading into later this week. All right, let's get started with natural gas. So, natural gas, we have been looking at this tightening range for a while. And this is the uptrending support. And this is the downtrending resistance. So on last week, we talked about where there was a lot of confluence of support right here uh, at this 3.13 level. You had a downtrending support right here, bouncing off of that, horizontal support at 3.13 as well, and is at the bottom of this tightening range, this triangle looking tightening range 7. So it's very clear that we're going to bounce from here because initial move up, the move down is going to be within the prior move. That's what an equilibrium is. And we're just tightening up. So these. Now we have pretty much retested this top of the range of the tightening range. Next move up is within the drop. So the move is also always within the prior move. And we have rejected from there once, came back down, bounced, rejected from there again, and rejected from there again on Wednesday. So very clear where natural gas is going to be trading as long as it's within this range and this range. So currently, it'll probably just, if it cannot break this level, it'll just likely chop it within here. It doesn't have to go to the end of the pattern. Obviously, the end of the pattern is going to take us all the way to January, but it could just as well break out here, here, or here, here. So there's no saying that we need to be within the pattern, but as long as it's rejecting from these levels, we know where it was going to trade, right? So if we can't get over here, we're probably going to come down to test this 3.45 as well as the 3.37 level. And then we'll see if that holds. If it doesn't hold, we're going to come down and test this low, which is the Tuesday's low at 3.3. If it breaks that, we're probably going to come down to the low range of this tightening range here, down there. And then bounce from there. But we still come up here and retest it and break this just later this week. So let's take a look at the hourly charts to give us more clues to what is the current trend. So we had a nice move here, but we never really changed the hourly trend. So now we have given that all back, bounced. Now this is where the bulls need to show up for the trend. Because if we do break below, right here, this 3.431 low, that's an hourly downtrend confirming. And once the hourly downtrend confirms, we will probably come down to test this low. And this is looking like another mini tightening range within the prior big tightening range, as you guys can see. Let's just draw it together. So you can see we're very clear here. So you can see this is the move. This drop is within the prior move. Now this bounce is also within the prior move. And you can see this drop as well. So it's pretty much just tightening up as well. And whoever confirms the hourly trend first will likely get a little more follow through. So we get an hourly downtrend here, break below this pivot, then we're for sure coming back down to test this 3.38 because this was the prior resistance. You can see all these resistance rejecting from here, right? So when we come down to it, it's going to act as support, which also coincides with this uptrending support line that we just drew. So that 3.385 right there, the spot, is going to be very key for me. And if we do break that, that is the bear break of this tightening range. When that happens, a bear break of this tightening range, we will probably going to come down to test these next levels down here, 3.38 and 3.25. So that's the first thing I'll be looking at, which way that the small hourly tightening range is going to break first, which way this is going to break, or can the bears come from an hourly downtrend, or the bulls are going to negate it first. And that's we'll be looking at this pretty much tomorrow because very likely it will probably break. Let's see here. End of the pattern is November 7th. So we could probably break within here. It's getting pretty tight already. So either by the end of the week, let's say we come down here, bounce, chop. Yeah, probably by the end of the week or Monday. Aren't that far from an hourly downtrend though. If we just break below this pivot, 1.6%, we are in an hourly downtrend. Then we're coming down to test this low. All right, let's take a look at UNG. UNG is a tradable ticker for natural gas. So similar look. Got a rejection here. It's also tightening up as well. Big move up, big move down, getting tighter, tighter. You actually break before natural gas, so you can see the end of the pattern here. The date is around end of the month. And as of now, we know where exactly natural gas is going to be trading within this range, as long as it cannot break either way. And you can also see on this hourly chart is also tightening up as well. Just like that, we were just like natural gas, where we're looking at this tightening range on the hourly charts. So same thing, if it breaks below this pivot right there, 7.14, that low is going to come from an hourly downtrend, and it will very, very likely come down to test this sideways range and this uptrending support close to 6.8 level, this mirror looking line here. And if we can both need to negate it, then we need to break above today's high to come from an hourly uptrend, breaking above this pivot. And if we can do that, then we're definitely coming back up to test this downtrending resistance mirror line from all the way back there. Yeah, very clear tightening range, and we'll see which way it breaks tomorrow. All right, oil. So oil broke out of its tightening range. So this is what a bear break of a tightening range looks like. Big move up, gets tighter and tighter and tighter and tighter, and bear break. That's what I meant when it doesn't have to go to the end of the pattern. Right now, oil has confirmed its daily downtrend. It did confirm it already on Monday, but got more follow through today and yesterday. Now we are pretty much testing the low of this range here, which is starting to get into this structure, as well as the top of this structure. So let's get some lines going, horizontal ones. So if we do come down here, we're probably going to come down to test. Let's see, I like it here a little bit more. You can see this is a strong support zone. When we're prices below it, it acts as a strong resistance zone. Prices above it acts as strong support. So now that price is above it, if we do come down to there, there's a couple more here along the way. This would also act as some support as well. So 73.33 will be the first level that I'll be looking at when we come down to it. And if we continue the downtrend, it could still bounce slightly, weak bounce, and then head lower, just like what we did over here. Daily downtrend, weak bounce, daily downtrend confirm, follow through, weak bounce, confirm, follow through, weak bounce. And so we'll see if the size of this bounce is going to be when we do hit this 73.33 support. If it's a weak bounce, it's going to be another bear flag. And hourly chart is going to be our guide. You can see we back tested at the support. So this mirror looking line was acting as support, where this equilibrium support was. Back tested it, rejected. So now that's why we went lower. That's definitely what the bears want to see, especially when we back tested this prior support, now acting as resistance. Yeah, so there may be more downside on oil. We'll have to see if it can hold 73.33. All right, let's take a look at gold. Gold. Talked about this last week, where I think I talked about it on Monday or Tuesday, but we did hit this black looking line. And this is the prior strong support. Now it's going to act as resistance. So we ran pretty strong all the way from the bottom to that resistance, 11%. So I said that is very likely that we'll get a little bit of a pullback. Doesn't mean we're going to roll all the way back down. It just means that we need a slight pullback to cool things off a little bit and potentially retest it again. So this was the move, initial move, pivot being set right there, and that red candle right here, bounced, hit the top. Now that we retraced all the way down here, we're still in a daily uptrend because we did not break below this prior pivot right there. So if this bounces, daily uptrend is still intact, and we may retest this black looking line again. But we need to get over this 2004 first, because this is this super strong resistance acting as support here, resistance, and it goes all the way back. You can see all these times that we try to go above it and we end up closing below it. So we break up 2004 first, then retest this black looking resistance. If we can't do that, let's say we bounce here, can't even get over to 2000, then that may start to shape over head and shoulders. See right here, left shoulder, head, potentially right shoulder, depending on how strong this bounces. If it's a weak bounce and we start to retrace, then we may start looking for that head and shoulders look. Head and shoulders is a uptrend into a downtrend if it breaks the neckline. I have to keep watch on that and see if it starts shaping up. All right, let's take a look at the US dollar. The US dollar is going sideways and in that megaphone. So we drew this megaphone together. I forgot when, but it was probably last week or 2 weeks ago. So this is the resistance, and this is the support. So you can see that we bounce up at 1, 2, 3, 4, 5, 6 times, and 1, 2, 3, 4, 5 times. So we pretty much, I said it again yesterday. I remember looking at this yesterday in the morning. We pretty much straight shot up, touched it, and then went through like a waterfall drop. See right there. Let's see, in the morning, right here. In the morning, hit, and then boom. Retest, can get over it again, and then roll over today. So that's a good sign for the stock market bulls, because stock market bulls do not want to see yields or the dollar go up. It's okay if it goes up like slowly, chops around and goes up like that. Last thing the stock market bull want to see is something like this. It's like a strong trend upwards. Currently, it will probably come down to retest this bottom of this 105.6 again. And as long as it keeps bouncing within these megaphones, it's going to intact. But as it gets wider and wider, the pattern usually gets negated because it just gets too wide and it just won't bounce from there anymore. But as of now, still holding, and I'll be looking at this 106.2. You can see the amount of times we just chop within 106 it's been months. Yeah. So we'll probably come down to here. If we do break 106, then we're looking at 105. If we break that, then we're looking down at this bottom of this megaphone pattern. As of now, let's take a look at the hourly chart to see if they're already confirmed hourly downturn or not. Nope. Big enough drop where it can now have a potential of confirming an hourly downtrend now. But currently it's not in the hourly downtrend yet. All right, let's take a look at silver. So silver, similar look. A little bit stronger than gold, but it's not really going anywhere at this moment. We're still below this $23 range, which we try to get above here a couple times, went above, went lower. So this pretty much is also a tiny range. Let's see, show you guys real quick. Something like, it's hard to draw this one. There's not a lot of points, but you can see it just, the moves get smaller and smaller. We move up, smaller move, gets smaller and smaller. So now it itself will probably resolve itself pretty soon. And because the end of the pattern is just next week. But with silver's volatility, probably doesn't need to take it to the next week before it breaks. But you can see is all these pivots are higher, meaning it's tiny range, and all these are lower. That's why it's forming a range. And let's take a look at the hourly charts. The hourly chart is currently not very clear as well. Tightening ranges are usually not very clear. It's more of a sideways look overall. So as long as silver trades in this 23.5 and this 22.5 range, we know where silver will be trading overall. And we'll see which way this tiny range breaks first. All right, so I got for you guys, and I have recorded the stock market update video earlier already. So if you guys want to take a look at QQQ, S&P 500, as well as the 7 mega cap tech stocks, make sure to check that out. I did an analysis on that. And feel free to join the Discord. The link is in my YouTube bio. Everything's free. Feel free to come hang out, chat about stocks or whatever. And I will see you guys around. Have a rest of you guys' day. I'm still currently traveling, so probably might record a video tomorrow or Friday, but I'll see. And if not, I'll see you guys on the weekend.